Hey everyone, welcome to Bald Guy Money. As the old saying goes, history doesn't rhyme, but it sure does repeat. And the words to the current rhyming economic poem have been shown to us multiple times since 1971 when Richard Nixon took the United States off the gold standard and probably unknowingly introduced the world to the new rules of money, as Robert Kiyosaki has so eloquently put it, when he, Nixon, turned the US dollar, which had been hard, sound money up to that point, as it could be converted into gold and silver, into a currency backed by the United States government promise that, hey, we're good for it. Don't worry about a thing, Elvis. Nothing can go wrong. I cannot tell a lie. Fast forward to 2023, and you have former Federal Reserve Chairman Alan Greenspan going on national television saying things like this.
The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
And as much as I hate what he said, I at least respect him for being honest, because that's exactly what the US government and governments around the world have done. They've borrowed huge amounts of money, just like you see here, while exploding the money supply and making the dollars, euros, and yen that we use every day predictably worthless, while creating boom and bust cycles that are getting progressively worse as time goes on. So, in this video, I want to cover a couple topics, the first one being what signs I am seeing that suggest we are on the precipice or the edge of an economic downturn. You're really going to want to see these signs. And then I move from that to directly address the possibility of gold reaching parity with the S&P 500. Is it possible? If so, what prices are we talking about? Now, just before I get into it, if you're in the USA and want to stack some gold and silver from a reputable dealer, please check out channel partner Pimbex. It doesn't cost a thing to visit their website, and you will be impressed by their prices. Like this 1 ounce Krugerrand, probably my favorite gold coin, which they are offering for quite close to $2,000 a piece right now, which, if you think about it, was the spot price of gold as recently as Halloween. I will leave the link to this great deal in the video description for those of you who are interested, and if you want to check out the rest of what they have, remember, that's pimbex.com. You can reach them at the number on the screen. Just please let them know you came from Bald Guy Money. Now, digging into the first topic, and I promise to be as brief as possible, but what are the signs in November 2023 that the economy is headed for big trouble? Well, the first is that we are fighting the highest rates of inflation I have ever seen in my lifetime. As a result, central banks around the world have increased the cost of borrowing money, with the hope that less people will borrow money, economic activity will slow down, and inflation will naturally correct on its own. This type of environment has historically led to something I have spoken about a couple times on the channel, and that is when short-term yields on bonds rise above the long-term yields. That is called a yield curve inversion. And to keep it as simple as possible, it happens when long-term investors lose confidence in economic conditions. And as you can see here on this great chart I took from Game of Trades on Twitter, this has been the most reliable predictor of recessions since the new rules of money came into effect in 1971. And looking at 2023, we have reached levels comparable to those seen in the 70s and early 80s during a period known as stagflation, and we are currently sitting at a 60% chance of seeing a recession in the United States. A recession that I argue has already started and just been temporarily paused by the continued debasement of the world reserve currency, the US dollar, as the US federal government spends crisis-level amounts of money despite the fact that there is no crisis. And knowing that this spending is unsustainable, paired with the yield curve telling us that the private sector is bracing itself for a downturn, it's all but obvious that Either we will inflate till the dollar is worth nothing, in which case I hope you have gold and silver, or the spending slows down and is no longer able to bolster the economy anymore, at which point I also hope you own gold and silver. Because you will not like the way your 401k looks for a few years, and I will talk about the timelines when I get to the second part of this video. Moving on to point 3, which is a decline in global manufacturing, I have pulled up here the PMI Global Manufacturing Index, something I closely follow to tell me when I should buy silver, in that when this index is low and in decline, that is usually a good indication it's time to buy silver, and I've spoken about it multiple times on the channel. And apart from telling us that silver's a good deal right now, this index is clearly telling us that we are in the worst period of manufacturing globally in the last 25 years. That is a sign of weakness. That is not a sign that the consumer is strong, but that is a sign that the consumer is weak. That is a sign not that good jobs are being created, but it's a sign that the jobs that are being created are not productive. They're service jobs, they're government jobs. That is not a sign of a healthy economy. That is the sign of a totally sick economy, once again being masked by fake government statistics and massive government spending. So, moving on to number 4 on the list, what are smart people doing as they look at this situation unfold? And I don't care if you like these people. The fact is that they're smart, they know when the bottoms are in, and they know when the tops are in. I'm going to touch on why in a moment, but I am starting from a 2021 article. This article is not from 2023. And the reason I'm starting here will be obvious in a moment, because people like Jeff Bezos and Elon Musk were selling their stock that they own in their company in December 2021, actually all throughout 2021, at record levels. And in the last 3 months of 2021, as these stories started to come out in the press, remember, I was calling for the stock market to correct. And of course, we got that 25% correction from 4,800 on the S&P 500 down to 3,600. As you can see here, I talk about it a lot because I called this one exactly in an October 2021 video. So here we are again in 2023. My Patreon members will recognize this because it appeared in yesterday's video where I showed everyone exactly what my portfolio looks like right now. But we have smart money, people like Warren Buffett. I mentioned Jamie Dimon in my last video. You have people like this selling stocks. Not because they have a gut feeling, but because they have access, and here it is. This is why they know. Because they have access to data that we do not have. They know that unemployment, the 5th point on our list, is rising. And they know this official number of 3.9 is total fantasy. Just check out the Ludwig Institute if you're curious, which pegs this number at about 23% in the United States today. Smart money knows people are working multiple jobs to make ends meet, and they also know that more layoffs are coming and the exact scale of the layoffs, because they're the ones making the decisions on the hiring and the firing. And once that official unemployment number goes above 5 or 6%, that is when we will start to feel the pain. Real estate prices will come down, just as you can see on this chart, which clearly indicates the relationship between unemployment and house prices. This will add an additional layer of pain to the already increasing rate of delinquencies on commercial real estate loans, which banks are holding, and will, just as it has during 7 out of the last 8 recessions, result in a dramatic correction in the ratio of the S&P 500 index versus the price of an ounce of gold. We are already seeing the correction take place. We may even call this the 6th sign. And judging by how the S&P 500 performed in very similar economic conditions of the 1970s, not only do I think gold parity with the index is possible, I suspect the S&P 500 will not make a new high for about 8 years, just as we saw in the period between 1972 and 1980. So there's that timeline point that I was mentioning earlier. Now, how much do I think the market will crash? Here are some updated numbers that I've cranked out based on the same analysis I did that gave me the exact drawback level for the S&P 500 that we saw in 2022. And this method indicates that we could hit a bottom range for the S&P 500 between 2,746 and 3,518, meaning if history were to repeat itself, we could and really should see gold above $3,000 an ounce within the next 8 years. With my short-term target still at $2,353 per ounce, which I think we could see as soon as mid-2024. And that's a great segue to this video's viewer question from Matt Alderton. Hello, Matt. And remember, to all you viewers out there, you can submit your questions in the comments section of this video. I may just feature it in the next video, but Matt basically asked, when this blow-off top moment happens for metals, when the correction that I'm talking about in this video happens, what should I do? Well, the first thing is I wouldn't necessarily worry about selling it or not being able to sell it, as the increase in price, the rapid increase in price, clearly suggests, number one, that there's demand, and number two, that there's been some catalyst to have people move from paper assets into metal. So I wouldn't worry about that too much. And although I can't tell you exactly what to do, I can tell you what I am preparing myself to do, and that's a simple one to answer. And I have spoken about it in a video where I talked about converting metals into real estate, because that is exactly what I'm planning to do. Because remember, this should be accompanied by higher rates of unemployment and dropping real estate prices. I am not going to trade my hard monetary assets, my silver, my gold, for devaluing currency. I will rather sell it and convert it to real estate if my tax situation allows me to, or consider borrowing against it to avoid triggering a taxable event and buy the dip on real estate. By doing this, I will add to my portfolio of rental properties, which, if you ask me, are the key to financial freedom. And I have a tool that helps you identify when the moment to sell is and when the moment to get into real estate is. It is on my Patreon. Link to join my Patreon is in the description and pinned comment if you want access to that tool. By joining, you get access to tons of videos, my weekly newsletter where I talk about what good price targets are for purchasing things like gold and silver, even Bitcoin. I talk about it on there. So if you're interested, please take a look again in the description and pinned comment. Join me on there and join us in the Patreon Discord where we have chats and sometimes even live discussions, live calls. With that said, everybody, that's it for this video. I'm wishing you a fantastic day ahead, and I will see you in the next one. But until then, take care of yourselves, and as I always say, the most important pillar of Bald Guy Money is to take care of each other, take care of the people in the community you live in, and I will see you in the next one. Goodbye.